Welcome everybody to this week's Middle Class Investor. This is Seth Martin, your host. It is Monday, November 17th. I'm recording on Monday this week. And I've got a zoomed in shot here of the S&P 500, and you can see that this was last week right here. Last week was a pretty narrow week. In fact, we had about 15 points from high to low trading range, which was a very narrow range. In fact, you had to go back about 8 years to find a range that narrow. So the market, of course, these are very large range candles here, and the market is clearly losing some momentum here. And these are either going to bounce sideways or roll over and start pulling back a little bit. So this candle right here, this last candle, is this week. So since it's Monday, this is only Monday's action so far. You know, there's not a whole lot to say this week. I want to talk a little bit about gold here in a minute. Again, we had this rising wedge. We broke out of the rising wedge, but we quickly got back in it. It's hard to say really what that means. Maybe it doesn't mean anything. We're in a resistance zone right here. This box here represents resistance. So we're expecting the market to at least pull back a little bit. Maybe into this 2000 area, just below 2000. Maybe more, we'll just have to see. But we're continuing to watch the S&P 500. Now the volatility last week, let me zoom in a little bit on this. Volatility, just like the market had these huge range bars, volatility had huge range bars, and pierced our little pierced our trend line right here, and quickly got back above it. This mouse is not cooperating, I apologize. And then you can see where our volatility is today. It shot up a little bit, now it's come back down. This is again, this is Monday the 17th. Now each one of these represents a week, except this last one, which just represents today's action. Looking at interest rates, we've been talking about interest rates for a while. I think you know, whether or not this resistance box holds, which I think it will, but whether it does or not will depend on whether or not the market can get above this little red line here that we've got drawn. If the market can break out above that red line, maybe I should extend that. If it can break out above that red line, I would say this is the low for the interest rate market and the high for the 10-year Treasury bond. So we'll continue to watch that. It looks like last week we kind of pulled back a little bit more. This week looks like we're popping out. So we'll just have to keep an eye on that and see how things go. The Dow Jones Industrial Average looks very similar to the S&P 500. It's also in resistance. We'll just continue to watch it, see what we can see there. The Euro US dollar, we talked about last week. We talked about well, I zoomed in too far. We talked about potentially pulling back into this box right here around 120 if it breaks this line. Now at this point I think this line's going to hold, and it's probably going to bust up this way before it comes back down. I don't know for sure, but it looks like to me this line wants to hold, but if it doesn't hold, the euro is going to fall back down into this area. So we'll continue to watch that. For our friend in England, or somewhere in the UK, I'm not sure where actually, we've got Germany. This is this trend line here continues to hold for Germany, and I think I shared last week that I thought it was difficult to tell whether the euro was leading the U.S. or the U.S. was leading the euro zone, but it looks like to me, and I'll show you in a minute, that the U.S. will probably lead the eurozone and the U.K. But these two charts here are a little bit more ambiguous, especially this one for the United Kingdom. So we'll just have to continue to watch them, see which one chief storm there in the UK was suggesting that maybe the Eurozone, and I'm assuming he was including the United Kingdom in that it might be leading the world market down, and it could very well be. I think it's at a place right now where it's difficult to tell. We can go over here and look at gold real quick. Gold, I think it's interesting because it looks like we were looking for it maybe to come down into this area around 1,050, 1,100, something like that. And gold, at this point, if gold can get back above this line, then gold may have found a bottom for the time being. I think we're at a place where it's hard to say exactly what's going to happen just yet. But if gold can get back up through here, then this may be a near-term bottom. But if it comes up to this line and recoils, then I think we're looking at probably gold somewhere into this area right in here. So just to recap, we had a sell-off in gold, we had a retracement, and then we had a real strong sell-off, and then we've had this consolidation pattern here for a while, this back and forth, and we broke out of that. In fact, back here, I said if we broke out of that line, we were probably going to break out of this triangle. So that's gold, and you're right. We're kind of at a place of indecision around gold this moment. The dollar, the U.S. dollar, since we looked at the euro and we looked at the euro going lower, the dollar will likely take out this high. It's very close. Well, you probably can't see this high. Let me get it in the picture here. Yeah, I think you can see this high now. This high right here, 88,905, was the most recent high from, when was this? June 2010. And I think what you're likely to see with the dollar is you're likely to see it take out that high before it pulls back. So we'll continue to watch the dollar and see how that goes. What else can we talk about? Oh, let me show you the DAX for our fellow middle class investor over there in the UK. This is the DAX, and I think I explained last time this was some software that I use. It's to help identify the swings, and it also puts trade setups for you. It's by a company. For those of you that are interested, it's by a company called MT Predictor. MT Predictor is out of the UK, and you can go online, and Steve has videos. He can show you how he uses MT Predictor to trade futures. You can trade stocks that way too, actually. But this right here is the DAX, the German DAX, and what it's showing is that, and what Steve's software looks for is what he calls an ABC pattern. So you get this, down, up, down pattern, and then his software creates a trade for you on that. So what his software is saying, and his software is pretty good. It's not always right. Nothing is always right, okay? But his software is saying that the DAX is going to get up above 10,000 and take out this most recent high made on June 20th. So if that's the case, then look for another high in the DAX. It's also possible that the DAX could just roll over right here and go down. It's hard to say. It's really right in the middle of this range, which makes it really difficult to put any kind of probability on a guess. So rather than try to do that, I think I'm just going to refrain. Anyway, that's what's going on. It was a very choppy, quiet, narrow range week in the U.S. equity markets, and pretty boring. Maybe that's the calm before the storm. I don't know. But one thing we know for sure is that all these markets are in resistance. Now, they could chop sideways a little bit here and then bust out of resistance, or they could start to roll over. What I usually look for is right here. Let me zoom in. this day right here is the high. It's actually the high week. If we get a close down below, let's say on the S&P 500, if we get a close below 2028, 2025, then I would say you got a larger pullback coming, and we will just have to see how that manifests itself, how it materializes. Anyway, that's it this week for the Middle Class Investor. Forward the YouTube videos to your friends and family. You just copy the link into an email or whatever. You can also follow me. I tweet these videos to at Investor Class on Twitter. That's the @ Investor Class on Twitter. And you can retweet them, you can comment on them, things like that. There's just a way to make it a little bit easier to access this content in the marketplace. If you find this somewhat valuable, maybe weekly is too often, but I'm trying to keep a minimum level of contact with the people that are watching. But because not a whole lot happens from week to week in the market, at least not lately. But we'll continue to make videos once a week, and if you find the content useful, share it with your friends, your family members, people like that. Okay? Thanks a lot, everybody. Appreciate you coming in. This has been the Middle Class Investor. We'll see you next week. Bye-bye.